Alright, peeps, Danny here with another investing video. So it was a pretty wild week. So almost didn't feel like making it, but it's good to keep me honest and also, just learn from things. Um, the big thing, I've been thinking about, even talking about this not too long ago, is how, there are certain people, if they want to do something in the market, they do it. Well, today was this week was a perfect example of it. We got a big short in Zim. So my portfolio looks a lot different. So some context. I had kind of, well, to be honest, I just kind of got a little out of control. But ended up moving most of my NYL over to Zim, which actually looked like a pretty good move. Got in around, to me, at 15, and some at 15.25. I think it was about I don't know, it was like I think 3,000 shares at 15.25, and then 1,500 at 15, and that was before the short hit. So we were added 4,500 shares before the short hit. We'd also sold options, which aren't even on here, because what happened is I sold options pretty tight. Some of them for the ones at 14.25. I sold them at or no, sorry, those were 15, 25, and 15, because it totally repriced, so I forgot what I was doing. But yeah, it was at 15.25. I sold the ones at 15.25 at 15.50, and sold the ones at like 15 at 15. So it's basically no, there was almost no gain on those. I mean, there's a little bit, few $100s, but it was about 1,500 in options. So basically, you sell the options, you're going to get the cash when they expire. Um, so it's set to collect 1,500 in cash. So then the short hit. So I mean, it's a lot of chaos. It was a very difficult week, but it actually could be very profitable long term. So first thing I did is I de-optioned a lot of my Zim, because what happens is basically a short attack is this guy. I wish I could show the chart on Interactive Brokers. There's a website that displays it, but they kind of, as it gets further back, they pare it down, so you can't even really see it, because the short attack was so fast. It was about 2 days total between the attack and then the buyback. So the available short on Zim, and when you sell a short, you're basically creating extra shares to flood the market. You're betting against the stock. It's sort of a negative investment. So a guy created basically 1 million extra Zim shares in Interactive Brokers. No idea if he used any other platforms, but on Interactive Brokers alone, he created 1 million short shares. And then next day, he bought them all back. It was not like, it may have been actually a 2-day buyback, because I feel like he got to like, he bought 600,000 back, and then maybe the next day was 400. I kind of got so messed up in my mind of what was going on. But I mean, the whole process wasn't, the big thing was pulling all my options off, because what happens is your options are priced at that level. So when that fell, that 1,500 options, I basically got to buy it back for about $300. So I made about $1,200 buying those back. Plus, then I also had bought 1,500 extra shares at a very low price of what did I actually pay for that? Let me check. Uh, so I bought 1,500. Oh no, I bought 3,000 shares at oh no, I sold something back. But I bought basically, I bought 3,000 shares. I don't know. It's a little confusing. Oh, because yeah, I'd bought 1,500, and then it had rebounded a tiny bit, and I sold it, and then it sunk, and I bought it back. So I did like a little trade that gained me $150 during the crash, because I bought it and then it blipped back up. I sold that 1,500 shares for $150 profit, and then it sunk again, and I bought 150 more shares. Interactive Brokers likes to just aggregate it. So, instead of seeing two purchases of 1,500, it just shows me a purchase of 3,000 and aggregates it. So it aggregates that purchase at 13.95. So, but the nice thing is that I pulled my average way below 15. So that basically set me up to sell 15 options. And with earnings coming in, people pay a pretty petty premium for an option not long after the call date. I mean, it makes sense. Zim comes out, big earnings surprise, which is possible. And good outlook. That thing could rip to $17, $18. I mean, is it likely? No, but for people who can dream and who think that it's going to happen, and some people do, then obviously I don't think that's super likely. I mean, but on the other hand, you combine that with something like a really good China deal, yeah, that thing could rip to $19, $20. So it's not crazy that people want it. Obviously, I got in at 16.93. After the short started covering, it started going up, but even still, expiring, in a couple weeks, 15. Um, that's like barely any time. I guess. Oh no, 20, just 23rd. But I mean, that's basically 14 days from now. I'm basically going to make $3,126 because that's what they already gave me the money, but I'm carrying it as a liability. You can see my liability because of the price change. It's actually increased a little bit, but I mean it expires, and what's going to happen is when it expires, it either expires worthless and you just keep your shares, or they basically going to give me the shares at 15, and they're going to collect um, 50 shares. But I mean, I also had kind of punted a little bit on that because I was because it was falling and I wanted to just get some in, so I'd sold some like 2-day options for which expired worthless. It wasn't a lot, and then I sold some other options which are in 7 days. Or not a whole lot, but those will also. So I actually can add. Hopefully, I mean, hopefully I can get maybe a total of 66 options on this May 15. And so obviously, if all of that gets called, we're talking about 66. So my leverage is pretty high. If you can see, like leverage down there is 67,000. I mean, we're in acceptable ranges. It's something I've got to monitor closely. But I do have a lot of options of things I can sell. So I'm in no means in too far. But it is, it's at a level I have to monitor more than I appreciate. But I got in for a reason. I mean, obviously the return is still negative. And going back to actually did a little chart of, had it run. So I could see it, and then it logged me out, so I can't see it anymore. But I kind of did a chart. Obviously, I'm a little bit negative on the year, but obviously I've had quite a lot of dividends. I mean, I'll just go from my memory because I pretty much remember it. I mean, it's like 11,000 in dividends, 5,000 in capital gains, but the biggest thing is unrealized loss. But I mean, obviously Zim is a cyclical stock, and the current shipping environment has been difficult. So, I mean, although it's actually still, you know, the liners are still running at profit, but it's been difficult. But obviously at some point it's going to get back up. I don't think the 16.29 is such a great entry price, but I entered high when I still got a lot of capital gains. First year was like running around 40%. Returns obviously it's kind of sunk down quite a lot because of all this drag mostly from Zim. And the drag may continue. But on the other hand, I mean, looking at it, we've got two sort of scenarios. One, I get called, and then I've got quite a lot of cash, plus my unrealized is a lot better. It's obviously still got a lot of work, but it's that the unrealized kind of like slash in half. So I'll definitely be running, at that point probably like 10%, up, and then probably look. Hopefully Zim falls, get a good reentry. But I mean, that's one scenario. I mean, but another scenario is you don't know in China. But I mean that just from the stock alone. But the other scenario is that it doesn't reach that point, and then we run through the dividend, which would probably be about $1. I mean, it could be higher or lower. I don't know. I mean, we don't know yet. That's just a guess. A lot of people's guess is about $1. Um, that's $8,000. 8,000. So you take the you know all those options. I mean, which if I stack the options, it may be about $4,000 plus $8,000. That's $12,000, and then you're running with that stock. But then it's probably going to crash. It's going to be pretty difficult. It's actually probably going to send the curve more negative. But on the other hand, that it's going to be defending it by selling options every week, which I think will be fine. Um, but I mean, there's a lot more potentiality because you're making so much on the options because of the volatility. Plus, people, if you sell a 15 option, that people are going to like it. Even they may not pay a ton, but they're going to like it because there's the sort of moonshot of, you pay a few pennies, but those pennies add up if you're selling them every week. Let's say you're paying 10 cents, because let's say the China thing happens. It runs to 20, I mean, in that sense, I could just not, it's complicated, because trying to balance the profit versus my potential. I mean, if I get in the right place, I'm holding a lot of shares, and the news breaks, or I start to see the index moving. I may want to start increasing my options up to like 16, 17. That way, actually, when it runs up, suddenly I turn my whole capital loss into a capital gain. But I mean, the other option, obviously is if I do get called, at some point probably it'll drop down and just gotta get a really good low entry, maybe 12 or something, with good shares, and then it comes back to 15, I'll be in the capital gain sort of area. You think so. There are a lot of scenarios. It's really hard to know because there's just like so many moving elements. There's earnings. Does it end above or below the strike? There's China. But fundamentally, I think that you know, uh, I kind of knew this year was going to be a difficult year for this account. I mean, some of my other accounts are kind of more matured and also mostly sold out of Zim. Like I made the good profit on Zim and sold out. This is the big growth one where I wanted to keep it, and I'm going to keep it long term. But this is I kind of didn't get a full cycle. I feel like you need 2 cycles really to really just turn an account golden with Zim, and a lot of my other accounts have had 2 cycles. This one hasn't. This is the first account. Although my one account really had no, I mean the other account had 2 cycles. Um, this one's not had a full 2 cycles. Not even had a full 1 cycle. I kind of had like 3/4 of a cycle. But it's still very good. But that's kind of explains my very high entry. But I also ran some capital gains. So, but once I get through another cycle, I think hopefully that cycle happens soon. I mean, it could even be this summer, really. China gets a good deal. We get some huge spikes, maybe $3 or $4 dividend. But we'll see. It's just being patient, selling the options, and then just watching it, and maybe if I can get a sense that it's going to get a chance to run, I move off of the 15 and go higher, and hopefully just take that whole capital unrealized into a realized. But we'll see what happens. That's that for that one, I guess. And it it is what it is. But I mean, quite frankly, I mean, this could be a very good, difficult week. But you think I took 1,200 in profit already before this. I take the 3,200 plus. I think there's about 200 between the other options. Plus, when I resell it, probably that's about four. About 5,000 in options plus if it does get called, that's an additional like $750 in capital gains. So although it's more like reclaiming capital losses, or well, not really capital loss. They were never realized, but getting closer to removing the capital, the unrealized losses, because it's like we got to gain a 700 on those shares. So this week could easily be $6,000 gain basically. But I mean it's a lot of difficulty. But obviously, I think at this point, we're in a good position to weather it and look pretty actually in the long run. But it's going to be kind of a lot of rough sledding maybe for a bit, but I think it'll in the end be worth it. All right, so till next time, people.